Hello, everyone. Good morning from this part of the world, and depending on what time zone you are tuning in from, good afternoon and good evening to you all. You're welcome to the final edition of the Forex Morning Mastery for this week. And first of all, I would like to seek your pardon for coming in a little bit late this morning, as we had some technical issues. That is, we had to resolve them. That is why we went offline for a while before coming back on. But I'm thankful that things are working quite fine right now, and I'm very, very glad to be with you as we prepare for the final trading day of the week. Well, I'm very excited as always to welcome you to this final edition. It has been a wonderful week so far. Remember, we have been monitoring 3 financial instruments, which includes the USOILSPOT, the USDJPY, and the XAUUSD. The USOILSPOT though struggled to gain some traction, but we are finally on track to be on the positive side of our portfolios in the last 24 hours as we run through some buy positions. We will be looking at that in a moment. Then the USDJPY, we experienced a loss on the USDJPY during the week, and of course we are on the verge of recouping the loss we incurred during the course of the week. We will be looking at that one too. And finally, my favorite asset, which is the XAUUSD gold spot. We saw gold hit an all-time record again this time around for this month, for this week. So we are also going to be looking at that one too. So I encourage us all to stay tuned in, as I do have very interesting, insightful, and simple trading setup we will be using to navigate the market dynamic today. And of course, Fridays comes with its own peculiarity, being the last trading day of the week. And of course, today also doubles as the first trading day of the month. So there is a high tendency of volatility due to this rounding off of trading activity ahead of the weekend, and of course, repositioning from major key players in the market in anticipation of the new month. So we are going to be taking all of this into account while we review the current market structure. So stay tuned in so that you do not miss out on the valuable ideas we will be deliberating on today. And for those who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. The Forex Morning Mastery is an educational avenue where we come together to understand the behavioral patterns of market participants through the lens of price action and fundamental analysis. So it's not a signal service platform, but an opportunity where we can come together to learn and become a better trader while we manage our trades. So we run this 3 times in a week: Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So you are highly welcome on board, and I encourage you to actively engage in the comment section. And do not forget to support the channel by giving that video a thumbs up. So with that said, let's dive right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are monitoring for this week, we have been focusing on high impactful event from both the United States and the Japanese economic docket. However, through the course of the week, the Japanese economy is short of any high impactful event. Instead, we have been looking at mid-tier economic features. In fact, I would like to include that into the thing we are looking at here, so we can have a broader view of what we were looking at through the course of this week. So at the beginning of the week, we were looking at the unemployment rate from the Japanese economic docket. That was on Monday, and it came in 2.4%, which was better than what market had expected and even better than the previous month. And this obviously gives some hope for the Japanese yen. As we saw during the first half of the week, the Japanese yen was gaining some positive traction against the US dollar. And then on Tuesday, we saw the XAUUSD job openings, which obviously will be giving market participants an insight into the health of the labor sector. And if you look at the XAUUSD job openings, it came in a little bit lower than market had expected, and of course lower than the previous month at 7.443 million. So it tells us that job openings reduced in the month of September, which is not something good for the US dollar, of course. Then on Wednesday, we saw the ADP employment change, which came in way higher than what market had expected, giving some hope for the US dollar. And of course, we saw some traction during the midweek in favor of the US dollar. And for those of us who are monitoring the gold as well, we saw this traction, which obviously gave us some opportunity to capitalize on that downtrend move, which we will be talking about in a moment. Then we saw the GDP data from the US coming in lower than market had expected. What is the GDP? Well, the GDP tells us how an economy has expanded or contracted in the previous quarter, and the data that came in here was at 2.8%, lower than what market were expecting, which was at 3%, and the previous quarter was also 3%. So though there was an expansion in the US, but the expansion was not as pronounced as what market had expected. So we are going to be looking at how the market had reacted to this event when we go into the charts. Then later on that day, we saw the retail trade data from the Japanese economy, which was woeful, a 0.5 as against the 2.3%, which wasn't promising at all. And it was at this point we begin to see some reversal moves in the Japanese yen. Then on Thursday, the Bank of Japan's governor had a speech where he did reiterated the possibility of the Bank of Japan intervening in the market, and this boosted the Japanese yen a little bit, taking us out of that buy position we took at the beginning of the week, ending that run in a loss. However, the recent development in the Japanese economic docket doesn't really seem supporting the potential of an intervention by the by the Bank of Japan, and this is due to the parliament. They lost the major party lost they are sitting on Monday, as on Monday or Tuesday, and this could hamper any potential intervention at this point. And I think this is one of the reasons why the US dollar had been gaining some traction against the Japanese yen in the last 24 to 36 hours. We will look at that one too as well in a moment. Then today, Friday, November 1, it's a new month. Once again, happy new month to everyone in the house. So we are going to be looking at a couple of high impactful events today, all of which will be coming in from the United States economic docket. Now, the first one here on the list is the ADP the average hourly earnings, right? So the average hourly earnings, for those who don't know, is also a labor-oriented data, which gives us an insight into the percentage that it measures the change in pay for workers in the United States, and it's also considered to be a key indicator of inflation. So if the wages are rising quickly, it could lead to higher inflation, prompting the Federal Reserve to raise interest rates, which often will strengthen the US dollar. But if it drops, definitely we are likely going to see a contraction in the value of the US dollar. So today, 12:30 p.m. UTC, we're looking forward to this data. And from what we have here, the previous month we saw a 0.4% expansion, and market participants and economists are projecting that there will be a little bit of decline for the month of October. So they are pegging it at 0.3% expansion. So we'll look forward to see what the actual data will be on that one. Will it be just as market had expected, below expectations, or even beyond market expectation? But I think by now we all understand the dynamics behind the average hourly earnings and how theoretically it is expected to influence the US dollar. So let's mark that timing out on that one. Then simultaneously, we will be looking forward to the non-farm payroll report. This is one of the major events for this week, and for those of you who have been with me for a while, you know how important this is, as it is considered to be a key economic indicator that shows how many jobs were added or lost in the US economy. And of course, the data exclude details from the farming sector. A strong report usually signals a healthy economy, which can lead to a stronger US dollar, while a weak report can have an opposite effect on the US dollar. So the timing of this one is 12:30 p.m. and the previous month data came in at 254,000, and economists are projecting that there will be a huge decline in that regard, though there will be an expansion of 113,000, but it wouldn't be as much as what the previous month data says. So it tells us one thing here, that the labor sector is contracting, though it is healthy, but it is contracting at this point. But we'll still need to see what the actual data is going to be saying. Will it be just as what market had expected, or will it be beyond it, or even below it? And of course, whatever the outcome is, will definitely have an influence on the US dollar. Then finally today we will be looking at the ISM manufacturing PMI. This is a report that that measures the health of the manufacturing sector in the United States. And like I usually say, it's an index that runs between 0 to 100. So when the PMI is above 50, it signals growth in the manufacturing sector, which is going to be positive for the US dollar, and a reading below 50 suggests contraction, which can weaken the dollar as it points to a slowing economy. So look at what we have been seeing here. So the previous month came in at 47.2, as you will see here. So this is the data we are looking at. So 47.2 for the previous month, right way below the 50 mark. So that shows that there is a contraction in the manufacturing sector, and economists are projecting that we may likely see a 47.6 for the month of October. A little bit of expansion compared to the previous month, but it's still way below that 50 mark. So we look forward to see what the actual data is going to be on that one too as well. Will it be just as market had expected, below, or even beyond expectations? So now we have an insight into the theoretical expectations, or how the actual data will influence the US dollar market dynamic. So today it's 2 p.m. UTC for the ISM manufacturing PMI. Now, with that being said, here we have about 3 important event we are looking forward to, spanning between 12:30 p.m. UTC and 2 p.m. UTC today. And one thing for sure is this. As technical traders, we do understand that the anticipation of this major event has a way of influencing how market participants will behave and build up to that particular time. And this usually reflects on the chart as price action, structural patterns that we can actually use to strategically position ourselves for the next move. So what we are going to be doing right now is to go right into the chart and let's see how the market participants have been behaving prior to this event, and let's see if we can bring out a structural pattern that we can use to help us position ourselves for this build up. So with that said, here we will be diving right into the business. I see your comment, Wokocha Kingdom. Good morning to you. Trust you're doing very well there. All right, so the first asset we will be taking on this morning, as always, is going to be the USOILSPOT, and what a tremendously profitable week we have here on the USOILSPOT. Though the momentum did not start very early, as we saw during between Monday and the early part of Thursday, that was yesterday. The market was more or less going through a consolidation phase, which further emphasized the level of indecision going on in this particular market. And of course, for those of us who have been part of this journey through the course of the week, we talked about a lot of fundamental factors behind the scenes which has been influencing how the market has been behaving. We talked about the during the first half of the week, we talked about the negative influence of the crude oil, which incited some selling opportunities for us. Remember, at the beginning of the week, we had this range-bound structure between the $68.85 level and the $67.85 area. And of course, we saw how the week started with a huge engulfing bearish candle as we saw price crash significantly at the opening of the week. And one of the reasons we attributed this to was the ease in tension in the Middle East. Remember, Israel retaliated on Iran during the weekend, and of course the remarks and the response from Iran really showed that there might be no retaliation to that attack, and this further eased tension in the Middle East, and the fear of supply disruption was really reduced, and this exerted a huge pressure on the oil prices. Then furthermore, we also talk about the weak oil demand concerns, as we saw persistent concerns about weak demand which continue to impact market sentiment. And of course, in our simple economics, rising supply usually pressures price to drop to the downside, and this was one of the reasons why we capitalized on the sell opportunity we took here on Monday at the breakdown of the $68.35 level, and we rode that momentum all the way into the $66.90 area. That was about 120 pips, and I can remember updating us on my Telegram platform that we move all stop losses and secure that position. Now, while monitoring price action through the Tuesday stroke Wednesday trading session, we noticed that despite the strong bearish momentum that started this week, sellers were finding it difficult to break through that area between the $66.90 level and the $67.15 area, making that area a temporary demand zone. As you will see, every attempt by sellers to break through was met with strong resistance from buyers. We also saw this happen at the beginning of Tuesday's trading session, and of course in my commentary on Tuesday I updated us telling us that if we cite a reversal setup around this demand zone, it will be a good opportunity for us to continue an uptrend move. And this was exactly what happened. We saw price continue to reject that area. We bought at that point, added more positions at the break of the $67.80 area, and we kept on adding more as price continued to find higher highs and higher lows. And during our last session on Wednesday, here I did mention that we move all stop losses to somewhere below that ascending trend line, as that trend line there is going to be playing a significant role in helping us navigate this uptrend scenario. So as long as price remains above the trend line, we will continue to maintain a bullish bias, and the only condition that will make us sell is for price to break down that ascending trend line, which obviously never happened. And this gave us more confidence to continue to buy the US oil. Remember, we also had a $70 area as an area to look out for buying opportunity. And this morning, while I was looking at this chart, I was able to identify another level at the $70.80 area, which I personally joined as well. So at this moment, we should be having a minimum of 4 buy positions running in profit at this point in time. And for those of us who still kept our positions open and active, well done and kudos to you. So if you would ask me right now, it is high time you want to be moving your stop losses accordingly. If you are yet to do so, please do so right away. And the most appropriate area to move stop losses to at this juncture is around the $70.50 and the $70.20 area. Let's give enough breathing space for price action to move around. Remember, today is the last trading day of the week, the first trading day of the new month, and the fact that we are looking forward to some major impactful event today could bring in some volatility, which could cause some choppy market conditions around this area. So let's give enough breathing space so that we can still be in the trade if the uptrend will continue. So with a well secured position at this juncture, what is going to be our plans for today? What is our expectations? What chances do buyers have in this market, and what are the likelihood that sellers could probably take over the market as a result of profit-taking activities ahead of the weekend? Well, to be able to have a deep understanding into the behavioral patterns of market participants around this technical structure, we need to understand the drivers behind the scenes. Now, the geopolitical risk escalate with reports that Iran may be planning a retaliatory strike recently on Israel from Iraq. This is a report that I read on Reuters yesterday night, I think, and involving drones and ballistic missiles. That is intelligence reports telling the U.S. intelligence report as at yesterday evening, and this could potentially increase concerns of all disruption. In fact, the intelligence went to as far as saying that this attack is likely going to be happening before the US presidential election, which is on November 5. So for me, this could further escalate tension, and the fear of all disruption may increase, and this may lead to an increase in demand to just stockpile just in case anything happens. So I want to bank on this to give oil prices another platform to rise again. Then another factor that we cannot ignore is the OPEC Plus alliance, which include OPEC and Russia, reportedly consider postponing its planned December production increase amid concerns of over weak demand and rising supply, aiming to support prices by limiting output. Now, for those of us who are part of our Monday session, remember I talked about this, that OPEC was planning to increase production in December, and that is increasing supply into the market, which from our simple economics, when supply increases, what happens? price definitely will drop. But with this recent development now of postponing the planned December production increase, well, this could further restrict supply to the market and of course increase oil price. So I want to be banking on these two developments to push price further to the upside. And if we take all of this into account, the path of least resistance for oil still remains to the upside. However, in as much as we consider, then another thing I didn't mention here, though I mentioned it on Wednesday, was the strategic oil reserve that US is trying to refill at the moment. So they are looking at, I think, over 10 million barrels, I guess, and the delivery will be happening in May 2025. This is a whooping number of, this is a whooping figure, and this could increase the demand in the oil market too as well and support the ascent of oil prices. Now, in as much as all of this is pointing at an uptrend scenario, we cannot ignore the potentials that sellers could also come into the market. And if we consider the persistent concerns about weak demand, which continues to impact market sentiment, we could see price drop to the downside. It's a possibility, so we can't take that out of the table. Now, with that being said now, and taking all of this into account, how do we interpret this information on the chart? How are market participants digesting this information? Of course, we will see this reflect on the chart as price action. Now, looking at the chart right now and looking at the way price action has been behaving in the last 3 to 4 days, it is quite obvious that the market is bullish. And to further emphasize this is this beautiful ascending trend line in place after connecting the series of higher lows. And with this in place here, you know how we use our ascending trend line. We want to continue to look out for patterns and structures that support the idea of buying this asset. However, if we go to how the week started here, remember this was where price action started this week at the $71.60 level. This is where price started this week, remember, and we saw that huge engulfing bearish candle sliced down from that particular area on Monday. And as it is right now, price action is gradually approaching that critical point at this point. So here right now, we would need to exercise patience as we want to see how the market is going to be reacting to that particular level we talked about at the beginning of the week. So as it is right now, that is why I said earlier that it is very important that we move all stop losses. Let's secure this position while we wait and see how the market is going to be reacting to the $71.60 level. Are we going to see a reversal setup from here? That is, price continue to find selling pressure, buyers finding it difficult to break out of that structure. And if that is the case, if we can see a reversal setup, we definitely want to be selling the breakdown retest of the neckline of that reversal pattern, which is a counter trend opportunity. So if you're not a counter trend trader or you don't feel comfortable taking this kind of short-term trading opportunity, you might just keep it and wait to see how the market will react to the trend line. And we are talking about how many pips here. If we have a reversal pattern, a minimum of 150 pips. So if price gets into this trend line here and we begin to notice buy pressure resume again, I am willing to join an uptrend continuation. But if price drops below the trend line here, I will be willing to join a sell at the site of a retest of structure. So that is how we will be navigating this area today on this particular one. So I want us to mark out these lines as they will be playing a significant role in guiding our independent trading decisions. Now, if price goes ahead to break out and retest the $71.60 area, well, at this point, I will be confident enough to add more buy positions to my existing trade. So let's see how the market is going to play out around this area. And of course, I will be with you in the comment section of my Telegram platform to give us update, maybe an hour or 30 minutes into the release of the NFP report, so that we can be on standby to capitalize on whatever opportunity that report will bring today. So this is my simple view on the USOILSPOT. I hope I made myself very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 5-10 seconds. Let's see if there are any questions before we move on to the next asset on our watch list. And do not forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. So see you soon, guys. So in the absence of no questions, I will take that as a confirmation that we are all on the same page. I hope you've marked out these levels accordingly. Very, very important. They will be serving as they'll be playing a crucial role in guiding our decisions today. So let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. And it has been quite an interesting week. The market has been a little bit choppy. The movement hasn't been massive as expected. And in fact, in the midst of the rate hike speculation, support from the Bank of Japan's government as regards to intervention, slower U.S. economic growth, and low job opening numbers, the Japanese yen is still struggling to show some signs of resilience at this point. Now, if we look at the beginning of the week here, remember we had this range-bound structure which was supposed to be the platform upon which we will build our trading decisions for this week. Remember, it was right within the 153.245 and the 152.680, after which we captured a buy opportunity at the breakout of the 153.245, and price continued to stay above the structure for a while. Then we saw price drop down, and at the end of Wednesday's trading session, we saw price drop significantly down, taking us out of that buy position in a loss. And for those of you who were part of our live session, who saw my commentary yesterday morning, I did mention that since price has dropped now to the downside and hit our 152.00 level, a very important structure that was marked out on our 4 hours time frame. For those of you who are part of our live session on Monday, you remember this. We talked about in my commentary yesterday, I talked about this descending trend line, which has guided the movement of price action. Remember, this trend line was supporting a bearish bias. Remember, then at the beginning of the week we saw price broke out of the trend line, which gave us that opportunity to buy, and since then price action had remained above the trend line, and of course we can see price coming to retest that trend line right on the 152.00 level. We saw it come back here again during the later part of yesterday's trading session. And one of the things I mentioned during my commentary yesterday morning on Telegram, I said here that we will be looking out for a reversal setup around the 152.00 area, sharing a beautiful confluence with our trend line. So buy pressure, double bottom structures, head and shoulder patterns will be good for us to join an uptrend move. And in fact, for those who missed out on this one here, the market came back to give us another structure, another reversal pattern like a double bottom structure here to join that uptrend move. And if you are taking that position, you will currently be running with a minimum of 2 buy positions, one at the 152.00 and the other at the 152.680 area. So if you would ask me right now, if you are taking those 2 buy position, I will advise that you move all stop losses to anywhere above the first entry, securing the first position and limiting the loss on the second position. And one thing I would like to say here is that it appears that the US dollar is about to begin another wave of bullish momentum as price action is back above that major ascending trend line we identified on the 4 hours time frame. And one of the other factors that supports this technical expectation is the US dollar is currently regaining some strength across board, especially after the PCE data indicated a strong US core inflation. And of course, this has also rubbed off on the US Treasury bond yield, as Treasury bond yield right now is going through some elevation. Then another factor that I still think will support this technical uptrend is the decline in the Japan's manufacturing PMI. The report came in at 49.2 in October, signaling ongoing contraction in Japan's manufacturing sector, which is not a good signal for the Japanese yen at this point in time. And of course, the political uncertainty following the LDP coalition's loss in the parliament has also casted doubt on the possibility of a rate hike from the Bank of Japan anytime soon. So things are not looking rosy for the yen at the moment. For instance, the economic minister on Wednesday, Akazawa, I'm not sure if I pronounced that correctly, warned that a weaker yen could harm households by raising import costs and impacting consumption if wage growth does not keep up. So this is a major concern from the Japanese yen, and I still think that with all of this, the price of the USDJPY, the path of least resistance for the USDJPY still remains to the upside. Now, how do we continue to navigate this? Well, the structure speaks for itself. As you will see right now, we already have a breakout of this trend line already, and I still think that price could come back and retest that structure before it continues, maybe if any volatility happens following or in anticipation of the NFP report today. But I still hold on to a bullish bias here as long as price still remains above this 152.00 area. And of course, we have multiple levels that we can use to maximize the potential of the uptrend. We have the 152.680. We also have the 153.245, and if possible, price get this far today, we have the 153.875. This is the highest point price action has been for this week to maximize the uptrend scenario. Now, for those who are considering selling the USDJPY, for me at this point, if we consider all the fundamental factors behind the scenes, I am not comfortable placing a sell on the USDJPY at this point. And if it's likely going to happen, I would rather want to see price slice through the 152.00 area, and not just slice through this area. I want to see confirmations like continued selling pressure below the structure of my lower time frame before jumping into a sell. But trust me, I will be with you in the comment section of my Telegram platforms to give us updates if any of such happens, and give us a clue of how to jump into a sell. And even before the NFP report, I will likely drop a short-term time frame, like the 50 minutes time frame technical details, to help us navigate and anticipate the NFP today. So stay tuned in. If you are yet to be with me on the Telegram platform, please join right now so that you don't miss out on that one. So this is my simple view on the USDJPY for today. If you have any questions, feel free to let me know, or if you need some further clarifications, I'm here and willing to be of help in that regard. So I will take the next 5-10 seconds. Let's see if there are any questions before we move on to the final asset on our watch list. Stay tuned in. All right, so in the absence of no questions, let's move on to the next asset. So the final asset on my watch list for today is the XAUUSD, my favorite, popularly known as the gold spot. And what another phenomenal week we have here on this asset. Has the price of gold hit another record high at the $2,790 again, as for the first time ever, giving us some significant amount of profit through the first half of this week. And this momentum here has continued to be supported by the uncertainties around the US presidential election, and of course the Middle East tension is also driving interest in gold as a traditional safe haven asset. And of course, if you have been following the news, we have major analysts supporting the fact that gold may likely hit the $2,800 mark or even the $3,000 mark before the end of the year, citing sustained risk around the US election and of course a stable Fed interest rate cut expectations. So for me, I still think the path of least resistance for gold still remains to the upside. But before we go into the technical details on this one, let's run through what really happened at the beginning of the week and what led to the decisions for us buying this asset. And of course, we also sold yesterday. Remember, we are going to be going through all of that details for educational purposes. Now, at the beginning of the week, one interesting thing we were able to spot here on the gold was the fact that since the mid-month of October, price action remained above a demand zone, an area between the 2,710 and the 2,720, where we have seen that sellers have found it difficult to break through. So what this simply tells us that buyers are finding gold very cheap to buy around this particular area, and this lasted into last week's trading session. So at the beginning of this week, we witnessed a little bit of choppy market conditions, which emphasized the prevailing indecision in the market, as we saw price action confined within this 2,740 and the 2,724 area during the first 14 hours of the week. And for the fact that price action was unable to break through this area below the 2,730, despite the choppy market condition, coupled with the fact that price was sitting above that ascending trend line we spotted on the 4 hours time frame, we were willing to continue the uptrend move. So this was our decision on Monday, and the only condition we said here that will make us sell is for this ascending trend line to be breached and broken to the downside with a retest of structure to join a sell, which obviously never happened. So with this scenario in mind, we had our first buy position triggered at the breakout of the 2,730. This was on Monday. And then we kept on adding more positions at the breakout of levels such as the 2,740 and the 2,759. And I can remember on Tuesday and Wednesday, I gave us some new updates as regards to navigating this market dynamic. I think on Tuesday, I updated us with this. Yes, I updated us with this structure on Tuesday while identifying an ascending channel. So right here, this was where we were on Tuesday evening. Before I went to bed, I updated us with this one. So I was saying here that this was where price was when I updated. It was right below the 2,770. So I was of the opinion that price could either respect the resistance line of this ascending channel to bring price into the support line, where we shall be looking out for buying opportunities to continue the uptrend move, or price will just break out of the 2,770 to continue that uptrend, which was exactly what happened. This one happened. We saw price climbed up, and during Wednesday's trading session, I personally had some losses as I took a buy and a sell, both which end in a loss due to the immediate market reaction to the US GDP report. And of course, there was another report that came in on Wednesday. What's that one again? Let's see. GDP and the ADP employment change. So it was a mixed reaction in the market, and it took a while for market to digest the implication of that particular report. And as at the beginning of Thursday's trading session, I updated us with a new trading setup. For those of us who were part of my commentary yesterday, this was the setup I was looking at on Thursday. That was yesterday. So we had a trend line, and then we had a range bound structure between the 2,790 and the $2,777.50 level. So I was saying here on Thursday that if we see a breakdown of the 2,777.50, we are joining a sell. And if we see price break out of 2,790, we will continue to buy. And another condition that will make us buy here is if we see a reversal setup, which obviously never happened. So we joined the sell yesterday, remember? So we sold here. I personally had my TP target at the 2,750, and I did updated us that my price had hit my TP target. Remember, we had this potential target for sellers here that was between the 2,750 and the 2,726. So I placed mine at the nearest point, which was here. That was about 270 pips. I had about 3 sell positions as regards to that and was able to scoop on that one. And for those of you who are part of that profitable journey, well done and kudos to you. Now, the same area that is supposed to be our TP target for sell was also serving as a buy window, remember, and look at how beautifully that area lined up with that ascending trend line. And of course, we were looking out for reversal pattern to join that uptrend move. I joined that I placed a buy stop order around this area. Price moved up, though I've been taken out of that position, and in fact I'm looking for new options to join this scenario today. Now, with that being said here, first of all, congratulations to everyone who has been part of this profitable journey. But we also need to take into account some other factors too, which may cap the uptrend scenario. Now, one of which is the rising US bond yield, treasury bond yield, and a stronger US dollar, which could exert pressure on prices of gold, as these factors an expensive US dollar usually lessen the appeal for gold safe haven asset. Because of why? If the dollar becomes expensive, for you to buy the gold, it becomes expensive. You need to convert your local currency to an expensive US dollar to buy gold, which lessen the appeal for gold. That is one factor here that could cap the uptrend scenario here. Then the other factor is traders will definitely want to wait for the US NFP reports and the average hourly earnings today before making any aggressive bet at this point. So we may likely see some extended sideways trading activities, which will show us that major key players have stepped aside waiting for this report to happen before making any aggressive bet. And it's important for us to know that a strong report from any of this event today could raise expectations for less aggressive Fed easing, which may negatively impact gold, causing price to drop to the downside. Then another factor is the US core PCE report that we saw yesterday, which stayed at a 2.7% on an annual basis, slightly above market estimation, and this signals persistent inflation. Now, this data may influence Fed action, which could further weigh on gold assets, as they may likely want to maintain the current interest rates at the moment, and this could influence the gold negatively. However, besides this, the path of least resistance will remain bullish, but we cannot ignore the potentials that sellers can also come in. Now, how are we navigating this market today? Well, for those of you who saw my update this morning, I just quickly dropped an update on the 50 minutes time frame this morning on my Telegram and TradingView platform. For those of you who saw it, I hope you've marked it out on your chart, as it's going to be playing a significant role in guiding our trading decisions today. So we have a beautiful ascending channel on the 15 minutes time frame, as you will see here. So when we connected the series of higher lows, we have the support line of the ascending channel, and then we connect the series of higher highs, we have the resistant line of the ascending channel. Now within this ascending channel, our center of focus today is going to be around that psychological level at the $2,750 area. Look at how beautiful this level shares a confluence with the support line of that ascending channel. So what we are going to be doing here is look at what I said here. I said we'll be selling the breakdown of the structure. I actually did sell. I sold right here, but the bearish momentum did not last long. Moved my stop losses accordingly, was taken out with a modest size of profit before price climbed back up again. I also was part of this move up to this area before it dropped again into the structure, and it is at this point I'm beginning to suspect that the uptrend is likely going to continue. As you can see, the last candle here closed in form of a hammer candle, which theoretically tells us that buyers are still present in the market, though the price is below the support line of the ascending channel. But the fact that we still have hammer candles within the structure makes it skeptical for us to just place a sell right away. So I still hold on to a bullish bias around this area, so I look forward to buying anywhere around here. Seems reasonable. Anywhere above the 2,750 seems very reasonable to place. And of course, we will be looking at adding more buy positions at the breakout of the 2,755. So let me just label this out, as we will be needing it as a reference point to guide our independent trading decisions today. So we want to be adding another buy stop order above the structure to continue that uptrend move. So you want to be marking that one out as well. Now, taking into account the factors that could cap the uptrend scenario on gold, we cannot just neglect the potential that sellers could come into play. Now, this is where the 2,750 comes into play. So for me to join a sell, I want to see price drop below the 2,750. Not just drop below the 2,750, but I want to see some significant confirmation that it is time to sell, and this will reflect on the chart as continued selling pressure on my 5 minutes time frame, 1 minute time frame, depending on which area, before I can join a sell to the downside. And if that happens, I will be willing to add more sell to maximize the potential of that bearish move. So we have the 2,747, 350, 247, 350. You do want to be marking that one out too as well, as if price goes ahead to break down the structure, we're definitely going to be adding more sell positions to our existing trade. So you can see how crucial the 2,750 is going to be playing out today. So depending on how price reacts to the structure will determine what our next line of action will be. But trust me, prior to the NFP, I will be giving us some new update if there are any, or if it is different from what we have on the chart right now. If you have any questions as regards to my illustrations, feel free to let me know in the comment section. If you need some further clarifications, feel free to let me know. So I will take the next 5-10 seconds. Let's see if there are any questions before we start rounding off our trading, our Forex Money Mastery for today. See you guys. And do not forget to give that video a thumbs up. For those of you who had clicked on the like button, thank you very much. I really appreciate your support. And for those who are yet to do so, please do. This is the only and cheapest way you can actually support this community to grow. And thank you very much as you do so. All right. So, in the absence of no questions, oh, all right. So I see a comment here from Michael Mower. Is Michael Mower still with us? Michael Mower says that do you utilize COT reports to determine market sentiment? Well, no, I do not. I do not use. Well, the COT reports usually, though it gives us insight into the market sentiment and of course positioning of key groups like the commercial, because there is a way they tabulate it. We have the commercials, we have the non-commercials, and of course we have the small traders, which can actually help in understanding the potential market trends or probably reversals. But I don't use it because of the fact that this report is usually published on Fridays, and it only reflects position as of the previous Tuesday, which can limit its relevance in the fast-paced forex market. Now, I don't use it. Sincerely, I don't use it. So it's more like a lag report. It gives me what has happened in the past, not what is happening in real time. So instead, I rather look at the charts. I want to see how price action is behaving at the specific point in time, which will be giving me an insight into the behavioral patterns of market participants and how they are digesting the current economic event. So my approach is more like a real-time approach. I'm responding to what price is saying right now. In fact, when you look at the chart, take away the price level, take away the time, how you see is emotions, is sentiment of how market participants are behaving in response to the economic event or the fundamental drivers behind the scenes. So I believe looking at the chart alone, looking at the movement of price alone can give you much more than you need to actually take a decision at any point in time. So with just your price action, you can identify structural patterns, you can identify key levels, and of course you can know what the trend in the market is saying. So with that alone, I am very good to take a decision at every point in time. And for those of you who have been with me for a while, you can attestate to this understanding. So that is that on that, Michael Mower. I don't use COT reports. I rather look at my price action and take it in correlation with my fundamental analysis to make a decision at any point in time. So I hope I made myself very clear there, Michael Mower. And of course, glad to have you around with us this morning. So it's on this note, and in the absence of no other questions, we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate your presence, and I do hope you are able to gain one of two things from what we have discussed here. Oh, you are very much welcome, Michael Mower. Flowride, how are you doing? Glad to have you around. Trust you are doing very well. Okay, so today we were able to take on all of the three financial instruments on our watch list for today, which includes the USOILSPOT, the USDJPY, and of course my favorite, the XAUUSD, and we were able to identify simple trading setup that we can rely on as we prepare for the labor-oriented data from the United States, that is the NFP, the average hourly earnings, and of course the ISM manufacturing report. And like I did say earlier, today we are likely going to see some huge price movement, so we have to get prepared. If you have a position active at the moment, ensure you move your stop losses, secure them, as we could see price move in the opposite direction. And of course we have levels we've marked out, we have structural details we have marked out. I hope you mark them out on your chart. If you have done so, well done, kudos to you. All we need to do right now is exercise patience and allow the structures to mature. And of course, about 30-45 minutes into the NFP report, if there is a new trading setup on 15 minutes time frame across the asset we are monitoring, I will definitely update us on both my TradingView and Telegram platform. So stay tuned in on that one. So for those who joined us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. If you have done so, you want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you get to comprehend my analytical approach, which eventually helps you in making your independent trading decisions. So I look forward to seeing you on Monday morning, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to look at the market out from a fresh new note. And if you are yet to subscribe to the channel, please do so. I will be dropping some insightful ideas during the course of the weekend in preparation for next week trading session. So it's on this note, I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.